Ladies and gentlemen, good day, and welcome to the Q4 and FY'25 earnings conference call of Carysil Ltd. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference call over to Mr. Chirag Parekh, Promoter and Managing Director of Carysil Ltd.
A very good evening, ladies and gentlemen. Thank you for joining us for the Carysil Ltd Q4 and FY'25 earnings conference call. I trust you had an opportunity to review our financial results and investor presentation, both available in the company's website and on stock exchanges. Joining me on this call is Mr. Anand Sharma, our Executive Director and Group CFO, and SGA, our Investor Relations Advisors. Before we get into discussions about business, I, on behalf of the entire Carysil family, would like to, first of all, give heartfelt condolences goes to victims of Pahalgam, to salute the bravery of our armed forces, the unwavering courage, dedication, and precision under our strong leadership of our Prime Minister, Shri Narendra Bhai Modi. Operation Sindoor, to punish the perpetrators and planners for the attack on innocent citizens. This operation has demonstrated that India is strong enough to protect its people and territory ready to become a developed nation by 2050 by all means. Macro environment and strategic positioning. The global economy is undergoing a period of profound transformation. While geopolitical tensions and ongoing trade disruptions continue to present challenges, they are also giving rise to new opportunities. In this rapidly evolving landscape, agility, resilience, and a focus on long-term value creation have never been more important. We have navigated extremely challenging environment over the past 3 years. The period was marked by significant global disruptions, including supply chain constraints, inventory destocking cycles, and a broader economic slowdown, particularly in Europe, UK, one of our key markets. One of the most significant events today is repositioning of global trade due to sharp escalation in global tariff programs led by the recent increase by the U.S. tariffs. This has triggered a wave of reciprocal measures, reshaping global trade dynamics, and rushed to sign bilateral trade deals. India has signed an FTA with the UK, which will increase the ease of doing business with the two countries and will open further sectors into bilateral trade. India just completed the 11th round of FTA negotiations with the EU and advancing towards signing an FTA with the EU. Amid these shifts, Carysil is emerging as a preferred global supplier due to global standard, high-quality production, competitive pricing, and sustainable supply partner. Trade realignments, particularly those involving China and Vietnam, combined with rising manufacturing costs in European regions, are creating a favorable tailwind for our business. Despite external pressures and geopolitical issues, our business model has proved to be resilient and adaptive. We remain agile, responding swiftly to changing market dynamics, and continue to find our own path for our own strategic initiatives. Disciplined execution, we have maintained stability and growth. During this period, we successfully entered into new contracts and deepened relationships with existing customers, which I'll talk about this soon. This growth reflects the strength of our business fundamentals and our unwavering focus on execution and expansion. During the last 3 years, our quartz segment has grown to a CAGR of 12%, reaching about 645,000 units, while our stainless steel sinks, which is Carysil Steel Ltd segment, has been stronger growth of 20% CAGR, scaling up to 155,000 units. On the financial front, please inform that total income has grown CAGR 17%, reaching to 815 crore, almost $100 million. While EBITDA has improved to a CAGR of 14% to 141 crores. These results underscore the inherent strength of our products and commitment to long-term growth. Update on performance on the quartz zinc division. We are pleased to inform that the segment continues to perform strongly by encouraging demand trends across domestic international markets. Our quants zinc operations are currently in the range of 60-67% capacity utilization, which is likely to significantly improve in coming quarters. As informed earlier through a press release, the key highlight for quarter 4 25 had been a significant deal with the U.S. major retail chain through our customer Carysil, which is going to additional capacity and supply of 150,000 quartz sinks across spread 1,800 plus stores across the United States. The huge bulk orders are placed. We are proud to share this summer, every store across the United States will have the Carysil manufactured kitchen sinks. Dispatches are going on in tens of thousands. While we already started seeing bottlenecks in the molds, we had ordered approximately 7 molds and we need to immediately order 3 more molds as per the last email. To support this supply, we have earmarked a significant investment for molds and infrastructure expansion at a rapid pace. We also did sign a landmark agreement with UK major Howdens, the largest kitchen manufacturer in UK. And we have to announce a lot of news. As I said, mentioned before, there is calmness before the storm. I would like to give some breaking news here. As I mentioned in my last speech, we were going to bid for IKEA's global tender, which is a complete non-US business to increase our market share with IKEA as a quartz sink supplier from 25% to approximately 75%, technically increasing our business with IKEA by 3 times. I'm proud to announce in principle, we have awarded this RFQ award and subject to approval process of the quality standards. Our company had taken preventative actions by already capacity building and ordering the molds required to enhance this capacity. The final audits are on the way, and we expect that this to complete very soon to further sign the final purchase order with IKEA, maybe within the next 60 days. Not just this, we are signing some record historic deals of our company, and it's all coming true. We still have many more to come. Overall, we see a strong momentum in exports, and not just but UK, Europe, India, Southeast countries, down under countries, including Israel, are showing significant amount of growth. I believe there is a significant opportunity for our company to leverage our technology and cost competitiveness in this tariff war against our competitors from European countries. What will be the challenge? I think the biggest challenge we see is to now build the capacity from currently, which we are utilizing 65%, and to start manufacturing to 85 to 90% within 90 days of time. As you know, with the downward trend, we had shut the plant 4, which had an additional 250,000 capacity. We are restarting now immediately. We started recruiting manpower, the infra, and the raw material required for the same. You shall see the wait for a few quarters. The further additional enhancement of the capacity needs to be done. If it needs to be done further, this we will see after a few quarters. Moving on to the stainless steel sink business, is thanks to the tariff war that we have started receiving overwhelming response now for stainless steel sinks also, since there's a big tariff on China and Vietnam. We have always maintained high technology. We have invested in PVD new machines, and we have made some significant breakthrough with Kohler India and Hefler to start selling them stainless steel kitchen sinks. We have already commenced our supplies to IKEA, significantly over competition in quality tests. They are seriously now looking stainless steel division to be one of the major source of supply to global IKEA. And not just that, we have also started receiving high level of inquiries from the US and Europe. I'm very positive it's going to work out, and we may have a significant expansion in the stainless steel sink division too. The segment continues to witness robust demand. Our current operations are running at a capacity of already 80+% demand of the high quality of sinks in India and export market. To meet rising demand and better value addition, we have earmarked a CapEx of more than 7 to 10 crores for expanding our stainless steel capacity with additional 70,000 units. With this expansion, we increasing the total capacity to 250,000 units. We expect the new capacity to be operational as early as Q3 FY'26. Turning on to appliances and faucet, I'm delighted to share we have successfully commenced our in-house assembly and manufacturing kitchen hoods and faucets and rapidly expanding into this category. Current assembly is around 30,000 to 35,000 faucets a year, and the goal is to target 100,000 units by end of the year. To up the game in this field, we are in discussion with leading global companies for the technology transfer, which we plan to achieve it very soon. With BIS restrictions, we have no choice but to invest in the next generation technology to meet the global quality standard to enhance our competitive edge. We will soon be laying the foundation stone for a new factory built-in appliances facility for manufacturing and assembling kitchen hoods, hobs, ovens, etc. And we will be able to shorten the delivery times. We need to up our game in innovation and optimize cost efficiencies. These futuristic design with meeting with technology will meet highest international quality standards. Carysil has been rapidly gaining prominence as a key supplier in the Indian market. Over the last few years, our kitchen faucet business has grown by 40%, and we expect a big growth coming in this year. Food waste disposers. With the growing demand of the food waste disposers for a greener planet, we are now actively exploring the in-house assembling of the food waste disposer with the appliances, which we are currently importing to be self-reliant. This transition will enhance margins, quality improvement, ensure more efficient lead times. We are also launching a massive campaign on this, how we use food waste disposer and its benefits. Our trust and commitment to make India a story across categories remains robust. And not just that, we'll be investing in the first kitchen and the bathroom countertop fabrication facility in Delhi and planning other 2 centers this year by end of the year, making Carysil the only first organized player in the Indian market, leveraging our UK and fabrication technology, which we invested in the companies in UK and US, for launching incredible seamless technology of the sinks with the countertops, and in turn launching our own surface brand, Carystone. Let me provide a brief on our international subsidiaries. Our subsidiaries in UK and UAE have continued to deliver strong performance. In particular, the UAE business have been robust demand in appliances category, reaffirming our strategy of strengthening present high potential global markets. Our ratio is reversed now, with the sales of 80% appliances and 20% sinks in UAE. With the riding success, with the first Dubai showroom, we are now opening a second showroom in Sharjah of 3,000 square feet on the main Sheikh Zayed Road to add better value and range of appliances and sinks. We'd also like to give some good news that Carysil has now got a breakthrough in UAE with the biggest developer, MR, which is a state-owned company for the Carysil sinks. I'm also pleased to announce that we have been robustly growing more than our budgeted for the UAE market. In the UK, both Carysil products and Carysil surfaces are performing well, and we expect this positive trend to continue in the fiscal year, especially after the FTA deal between India and UK. We have added significant amount of major customers will help to keep this growth momentum even with the adverse market conditions. Our Carysil company is now emerging to be among the top 3 in the UK top performers in kitchen category. United States and United Granite LLC, a recent US acquired subsidiary, which remains subdued for a year due to challenging local market conditions and margin. Q1 has now started turning around the corner by cutting more exotic and high value-added granites and stones. The mantra was simple: that you cut less and make more, thus by improving the gross margins. Carysil Ltd is helping and providing the gap to working capital to add more high-value granite and quartz slabs in the factory and also improving our sourcing competitiveness. We are optimistic and confident the subsidiary will turn to profitability in FY'26. It will also play a significant role in establishing the fabrication unit in India and building world-class fabrication seamless technology, which will be a huge proposition along with sinks and faucets. Domestic business and strategic growth. While we take pride in our global footprint, we equally focusing expand vision in India. Like I mentioned in my last speech, I've never been bullish about India, which I am now. Over the last 3 years, we have made consistent efforts to elevate our domestic business and optimize the potential vibrancy and aspiration of young India. We introduced series of workstation sinks, new range of faucets of luxury and convenience to our customers. We have significantly expanded our dealer network from 1,500 to 4,000. Like I said, we're going to thrust a lot of building new galleries, which we plan to achieve from 140 to 200 galleries by end of this fiscal year. We have ambitious target to grow by 25-30% at about 170-80 crore revenue this year. It is not going to come easy. We are going to severely focus on building our team, our brand building, marketing activities, and thus by dealer expansion across pan-India. We are also going to strengthen our service network by not just franchising, but having our own service people and team with 24-hour service with our own Carysil vans, which will result into the better sales of the company. With the indigenization by faucets and appliances, we'll have a better cost competitiveness and innovation to stay ahead of the curve. Riding on the success of workstation quartz sinks, Carysil is now introducing stainless steel workstations also now for first time 1.2 millimeter thickness, which is 20% above the standard thickness for better sturdiness and higher quality to stay ahead of the competition. This initiative will differentiate Carysil the rest of the competition. The company has invested in the second PVD machine, which will arrive in the next 90 days' time to cater the domestic needs and the export needs. This strategic initiatives will bear fruits, will lay a solid foundation, strong economic outlook, will have a clear and confident vision to double this to 300 in the midterm and further grow to 500 crore in the long term. In the next coming Q2, I would be seeing a program of this India story and also our next 100 million, how we're going to achieve this. To support this, we have strengthened our manufacturing capacity of appliances and faucets. We are aggressively expanding our brand presence through digital marketing, website, updated product, and dealer loyalty programs. Our pan-India footprint continues to grow. We opened 5 new appliance experience centers for a better experience. Our R&D initiative is also underway, focusing on the development of new sink materials, innovation, faucet engineering, and of the built-in appliances. The journey ahead is promising, approaching the spirit of purpose and innovation, whether it's enhancing our product portfolio, entering new markets, or investing in people and technology. We are committed to build a future that is bold, inclusive, and sustainable. At Carysil, we remain steadfast in our commitment for a greener initiative. Sustainability is not a goal, but it's embedded in the heart of manufacturing and product development processes. Our plants are continuously upgraded with eco-friendly technologies aimed at minimizing waste, conserving water, energy use, and operation remain efficient, environmentally responsible. We actively support a range of CSR activities and focus on education, skill development, and community. We firmly believe in creating a long-term value for stakeholders. As a responsible corporate citizen, we continue to lead our purpose, integrating sustainability and social responsibility of every facet of our growth journey. Now I would like to ask Mr. Anand Sharma to update on the company's financial performance. Thank you.
Thank you, sir. Good evening, everyone. Let me take you through the company consolidated financial performance. Q4 FY'25 performance. Consolidated total income stood at rupees 205.1 crore for Q4 FY'25 It grew by 6.8% on YoY basis. EBITDA for quarter 4 FY'25 stood at 35.8 crore with margin of 17.5%. Profit after tax and minority interest stood at 18.6 crore in Q4 FY'25, growth of 19.6% on YoY basis. Coming to FY'25 performance, sales volume for quad sink stood at 645,000 units, stainless steel sink stood at 155,000 units, kitchen appliances and others stood at 63.2 thousand units in FY'25. Consolidated total income stood at 819.9 crore for FY'25 as compared to rupees 688.1 crore in FY'24. It grew by 19.1% on YoY basis. EBITDA for FY'25 stood at 141.7 crore as compared to 133.6 crore in FY'24. It grew by 6.1% YoY. EBITDA margin for FY'25 stood at 17.3%, marginally impacted due to higher MMA price, which is our primary raw material, increase in export freight costs, some additional manpower costs which we built for capacity elevation, and marketing spend for our domestic business. Profit after tax and minority interest stood at 63.7 crore in FY'25 as compared to 57.9 crore in FY'24. It grew by 10.1%. Gross debt stood at 265.5 crore as on 31st March 2025. Our debt to equity ratio stood at less than 0.5%, less than 0.5. Cash and bank balance stood at 68 crore, which include fixed deposit earmarked for capex from our QIP fund. Working capital days stood at 87 days based on the sales. Our working capital days for March 25 increased primarily due to strategic decision to increase the level of imported inventory for our traded goods, primarily owing to BIS standard implementation from March 2025. So we have to maintain sufficient inventory for our finished goods, as well as we wanted to have material for our in-house manufacturing of chimney and hobs. This built-up inventory is aimed to strengthening our supply chain and supporting our future growth. We anticipate that working capital days will normalize in upcoming quarters as inventory levels stabilize. We have also built some inventories in our UAE company because this is growing in a very fast pace. So overall inventories are high, but it will come into normal cycle within quarters. On the capital expenditure front, during FY'25, we have invested 45 crore. Out of which 12 crore is spent in quarter 4 FY'25 alone. These investments were directed towards procurement and installation of new machineries, equipments and molds, which are critical to supporting our upcoming manufacturing facilities and enhancing our production capability. With this, I open the floor for question and answer. Over to you, operator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants are requested to restrict their questions to 2 per participant. The first question is from the line of Ayush Chabaria from Shravas Capital. Please go ahead.
Yeah, am I audible?
Yes, clear.
Yeah, so I just wanted to understand, like going forward, now that we have signed so many deals, what is the level of capacity utilization do you expect at the quad sink level? And any guidance on the revenue going forward with the new deals coming in?
Yeah, so like I had mentioned, I think we will be starting utilizing our capacity month on month progressively. So we expect to achieve a 85%, 90% capacity utilization within the next 3 to 4 months.
All right. Also,
By
just trying to
quarter three,
understand on the
latest by quarter three. Yeah.
all right. Also, just trying to understand on the raw material front, have we seen prices cool off? Because I think a few quarters back we were commenting on prices being elevated and that affecting our gross margin. So do you see any cool off in the prices?
Yeah, both these prices have cooled down, the freight charges as well as our material prices, especially the MMA prices was very high, as our CFO said. So it's already cooled down at this point of time. So that's why you would have seen our margins for quarter four has improved quite significantly than previous quarters.
All right. So going forward, we maintain a guidance of 18 to 19% margins, right, on EBITDA basis?
Yes, we maintain 18 to 20% our margin guidance. We stick to that.
Also, do we see any impact on the tariffs going forward from the US? Like, I mean, there's no clarity as of now, but do you see any tail risk coming playing out because of that?
So I think that just now everybody is getting a 10% attracts duty, anything which is imports in the US. But we don't see any significant increase in the tariffs as not that there is a reciprocal duty on things. So I think as of now, I think it all looks good, but let's see what comes on further.
All right. All the best for the future. Thank you so much.
Also, I would like to clarify, we do not fall under the same quad surface category like others do. We have a different category, so we don't fall under the same category of the quad surfaces, which we had clarified in the last time.
Understood. Thank you.
Thank you. The next question is from the line of Resha Mehta from GreenEdge Wealth Services. Please go ahead.
Thank you. So Chirag, your opening remarks, sounded off a pretty buoyant demand scenario that you're looking at. So with that, do you think that 1,000 crore revenue is possible in the current financial year itself, which is FY'25-26?
Yeah, I think, our number is our outcome of what we're going to do. I think the guidance what we had given is a 15% increase in revenues should be around 930 crores for this year. I think as of now, we are just busy on focusing to enhance our capacity. So what I would say is that do we have a potential to reach 1,000 crore annual run rate in quarter three, quarter four? Yes, it could be possible. But right now, I think we are slowly and gradually busy in just increasing our production capacity.
Right. And in your opening remarks, did I hear you right that 2.5 lakh quads in capacity, which was dormant, is kind of you're going to restart it? Because I think the current existing capacity is 10 lakhs. So okay, so then our capacity goes up to 12.5 lakhs. So the 12.5 lakh capacity, and then on that we'll reach a 85-90% capacity utilization in the next 3 to 4 months. Is that understanding right?
No, that is not the right understanding. The understanding we have of million sinks, 10 lakh units capacity. We had shut down one plant for which we had approximately 250,000 units. So we are restarting that.
Okay. Understood.
Capacity remains at 100,000 sinks. It is not 12.5. It remains at 10 lakh units. So the 85-90% capacity is on 10 lakh units.
Understood. And
sorry to interrupt you, ma'am, but we request you to rejoin the queue for follow-up questions. The next question is from the line of Vishal Dudhwala from Trinetra Asset Managers. Please go ahead.
Am I audible?
Yes.
Sir.
Okay. Thank you for the opportunity. So first question was based on freight cost. Like, the significant increase in freight cost in business, given that
We are not able to hear you. We're not able to hear you, sir.
Sir, we request you to use handsets.
Your
while asking a
connectivity is
question.
bad.
Okay. Am I audible now?
Yes, better.
Yeah. So what has caused the significant increase in freight cost in recent year, given that the majority of your exports are on FOB basis? So are the exports handled on FOB shipping point or the destination basis? And additionally, since your import are on CIF basis, is that expense included in COGS or other expense?
Sir, can I answer this question?
No, so yeah. Answer.
Okay. So, like you said, most of our export is on FOB basis. That's why the impact what we are seeing is much lower than it could have been if more CIF our terms would have been. Okay, so impact is not that major. It is 1.5% only against the 2-time cost increase. Coming to import is on a CI basis, so everything goes into the raw material cost. It is not shown separately.
Okay. And one more question. Is the company open to include the promoter entity in its consolidated financials, saying it supplies important raw material? It might help improve transparency and be good for company in long term.
Sir,
Hello.
you have to answer.
Should I repeat?
Sorry. Can you come again? I'm not able to hear him properly. Yeah.
Okay. Is the company open to include the promoter entity in its consolidated financials, since it supplies important raw materials? It might help improve transparency and be good for the company in the long run.
So, I can answer this question.
Answer.
Yeah. So, the parts material which we buy from the promoter entity, Carysil Mineral, this is a related party transaction which is already disclosed in the annual report. There is a transfer pricing policy approved by the board. So the transparency is already maintained. Now coming to your question, whether that can become a consolidation and come into the consolidated balance sheet, that's a question for future, which may be addressed at appropriate time.
Okay. And one last question, if you allow.
Yes.
Okay. So how is the company viewing the outlook for the export market this year?
Sir?
What is it? I'm sorry. I'm just having a lot of problems hearing this gentleman. Sorry. Can you talk slowly and loudly, please?
How is the company viewing the outlook for the export market this year? Are you seeing any key opportunities or challenges?
So I've already mentioned in my speech, my friend, what are the deals we are making? We did Lowe's. We got RFQ for IKEA.
Okay. So I got the link.
And we have so we have a huge tailwind coming in for the export market across all the categories. If you have joined late, but then let me brief you that Lowe's, we signed a significant deal, and now we got award from IKEA's global tender for increasing our share from 25% to 75%, which is a significant increase. So overall, the demand, the tailwind looks good in the export market across the world.
Okay. That's it from my side. Thank you.
Thank you.
Thank you. We'll take our next question from the line of Vedic from Monarch Network Capital. Please go ahead.
Congratulations, sir, on good set of numbers. Sir, I have two questions. Firstly, on the costing side, as you mentioned in your opening remarks, that for Carysil, we have received that we have signed an agreement to supply 150,000 cord sinks on an annual basis to 1,800 stores. So can you just mention how much did we supply in FY'24 to Karen? A ballpark volume number.
Yeah. So I think we'll be able to later on give you this information per customer what it is. But US approximately, Anand, does about 25% revenue, 25-30%?
30% of our business. Export. 30% of export.
30% of our business. Correct. 30% of our exports. If you take our so if you take about 550,000 units approximately export, 30,000 would be US, would be around 175,000-180,000, out of which current should be around 120,000 approximately. So this would be, you are actually talking about doubling the business by adding loads to it.
So does this mean that in FY'24, Carysil had supplied around 120,000 units to Karen, and overall in FY'25 and
approximately.
Okay, and in FY'25 overall,
then we are expecting 25-26. We are looking, it could be a potential about 240,000 units with Karen including the loads deal.
So that is for FY'27, right? In FY'26, you mentioned in your opening remarks that will go to 150,000.
No, combining, I'm saying. This is I said additional, we are doing 150,000. Additional.
Okay, so additional 150,000 you will start supplying.
Correct. Yeah, so correct. So there'll be some cannibalization, but we are talking about approximately 240,000 units. It includes the US deal, the new major with the US major.
Okay, sir, got it. And sir, on the stainless steel side,
sorry to interrupt you, but we request you to rejoin the queue for follow-up questions as there are participants waiting for their turn. So, thank you. The next question is from the line of. Thank you. The next question is from the line of Sanjay from Bastion Research. Please go ahead.
Hi, sir. Thank you for the opportunity. So my first question will be on, sir, we have seen significant growth in the volumes during the quarter. But when I see the realization per kg, it has been dropped both in case of cord zinc and in case of steel zinc. So how do we see realization going forward? So during the quarter, we have seen 20% drop in the realization per kg in quartz and steel zinc.
So I can just tell you a very ballpark thing is that it is based on the product mix. So the product mix has changed and hence this has gone down. For example, a single board will cost much less. Now, since the US, which is a high value added product, which is going to now have with the new crackdown deal with the US major, this will increase the per piece realization. And I think which you will see it from the Q1 results.
Okay. So my second question will be, since we are seeing so much demand from across the globe and we are focusing on India as well, and probably from Q1, Q2, we will be, at 90% capacity utilization. So how are we planning on the CapEx side? Can you share any ballpark numbers? What are the CapEx plans we have and what is the amount we are seeing for FY'26 and 27 going forward?
Yeah. So for the current year, we have envisaged CapEx about 50 crores, which includes expansion of overall from sinks to fabrication to these appliances. We will, like I said, in the coming quarters, we will take the decision if we need to further enhance the quartz sinks capacity as well as the stainless steel sinks. It all depends upon how the market reacts, demands is sustainable or no. So I think within the coming quarters, we'll have a better clarity on this.
Thank you so much, sir. We'll come back on that.
Thanks.
Thank you. The next question is from the line of Resham Jain from DSP Asset Managers. Please go ahead.
Yeah. Hi. Good evening, Chirag. So I have two questions.
How are you, Resham? Yeah. Thanks.
I'm good, sir. So two questions. One is with respect to India business, which is 150 odd crores, and you mentioned that in medium term you see that business going to 300 odd crores. So if you can just give a sense, because in India we are doing multiple things, quart sink, steel sink, faucets, appliances. So what will drive majority of the growth? That is question number one. And secondly, from the overall economics perspective, margins and all, because we are investing currently, I presume margins will be much lower than our overall business. So how do you see the margin also moving over the next few years? Or would you focus more on revenue and margin is okay to get maybe 2-3 years later?
Yeah, thanks, Resham. So like I said in the quarter one, I would be displaying my whole next $100 million plan and my 300 midterm and 500 crore domestic plan, which I would like to meet the investors, and I'm going to display it, that what our plan, how we are going to achieve it, with what strategy. So I think definitely you will have more clarity. But just to give you an answer right now in a very, very brief way, I think we are seeing an opportunity across the categories, from quart sinks to steel sinks to faucets and the appliances. So I think we see all the categories, the growth needle moving very fast. But I do believe that we have a significant opportunity to move this needle further up in the sinks and the faucets category, which should be the largest contributor in this. As far as the margins are concerned, the company in the last year has taken some significant efforts to cut down the operation cost on the innovation, technology improvement, efficiencies at the operation level. The material prices are cooling down. Freights are cooling down. Our new customers, our new models have a much better value addition. For example, the US deal, the IKEA, which is coming, will have a great value addition. So that's why I think we are sticking to our margin guidance, 18-20%. And I absolutely believe, to answer your last question, we would not be focusing on numbers. Like I said, number is the outcome. We will not compromise on our margins. So we have always remained very prudent and agile, that our margin model should not be disrupted. It can be for a quarter, one or two, but on the long term, the margin model should have a constant improvement moving forward.
Yeah, thanks for that. And the second question is with respect to the quart sink volume. You mentioned that you can reach 90% utilization of 10 lakh capacity in next 3 to 4 months. For the full year, how should one think about the volume? Is it whatever volume you are getting, is it like one time and then it will happen, the next big one time will come later, or it will be more sustainable order? How should one think about the overall full year volume growth outlook?
Yeah. So, very good question. Even I'm also looking for the same answer. How it's going to be. So I think right now, I think it is all good. We'll see in the coming quarters how honestly it shapes out to be. It's very, very hard to predict at this point of time how the markets are reacting. You still have this tariff sword hanging up, but right now all looks good. But we'll have more clarity in the coming quarters how it looks. The only silver lining here I see is that we have a significant opportunity because of the cost and the quality what we have. So I think the consumers are going to have a much better cost levels at the stores. There has been a lot of inventory stocking in the last years. A lot of destocking has happened. So I think now the home improvement category you'll be looking at I think I'm very bullish on it. I think this year you'll see people building on inventory as well as the consumers will have a better price as a better product. So I believe that the home improvement sector should overall improve significantly across the world.
Okay. Thank you. Thank you, Chirag bhai. All the best.
Thank you.
Thank you. The next question is from the line of Reet Ranawat from Avendus Capital. Please go ahead.
Yeah,
Yes, sir.
Yes.
yes, sir. Could you tell me that you started with the kitchen appliances manufacturing in the last 2 years? So the volume is reported under the kitchen
I'm
appliances.
not able to hear you. Sorry.
Sorry to interrupt you, sir, but there is a lot of background noise coming from your line.
Hello, I'm audible now?
Yes, sir.
Yeah, so we started.
There's a lot of background noise. We're not able to hear you.
Yeah, I shifted. So we started with the kitchen appliances manufacturing in the last 2 years. So the volume reported under kitchen appliances and others is mainly from faucets, right? Or
Sorry, I'm not able to understand.
so the volume reported under your kitchen appliances and other segments, mainly all the volume is from faucets, right? Or is it from? So there was some confusion on my end.
No, so I think make it clear, we are building the manufacturing capacity of the faucets also. Like I said, we are at 35,000 pieces a year. We are also building the end of the year faucets to about 100,000 pieces. And we are building the new built-in appliances factory, also of the mix of ovens, hoods, and the hobs to about 100,000 units a year.
Okay, got it.
No, go on, please.
No, you can continue.
No, please
Hello.
go. Answer.
Yeah. Okay, so I can see that from 35,000 to 1 lakh of faucets and around 1 lakh capacity for kitchen appliances, am I right?
Yes, we are putting up the factory for that.
Okay, got it.
We are
And
laying the foundation stone next month to build a new appliances factory.
okay, got it. And do you have a timeline for that surfaces that you mentioned in your opening comments? So the facility for surfaces and countertops.
Surfaces and countertops, we have a timeline. We should be achieving within 150 to 180 days.
Okay, got it. Thank you so much.
So it will happen approximately by end of Q3 latest this year.
Okay, so do we have like the capacity for that or?
Yeah, so I think the capacity, we are still on a working stage, but we will know in the next quarter what exactly how much we would be doing it.
Okay, got it. Thank you.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investment. Please go ahead.
Thank you. Chirag bhai, in spite of quartz zinc volume growing as 2022 level and steel zinc rises from 105 to 155, kitchen appliances also rise. Our net profit in financial year 22 was 64.8 and financial 25 by 63.7. So our margin is half in compared to financial year 22. So we want the reason and when our 22 margin will come.
Yeah. So we have been saying this, Naresh, from quarter on quarter that we are under severe pressure for the increase in the raw material prices. There's been severe increase in the, in the freight. Company were invested heavily on the other divisions, subsidiaries and all. So that all the input prices are cooling off now. Freight charges also have gone down. The customers knew the product mix will also attract a higher value addition. So you've already seen it from quarter four, right? You would have seen for the year, but if you have to see the compare the 20 in the quarter four, the margin expansion has been significant. I think, if I'm not mistaken, our CFO would probably say, I think there's improved, Anand, from 16 to 19%, right? EBITDA's quarter four.
Yes, sir. 18%. 16 to 18%.
Yeah. 16 to 18. So it has significant, and we stick to our margin guidance of 18 to 20% for the current year.
Okay.
FY'25.
Okay,
Thank you, sir.
Thank you. We'll take our next question from the line of Ashutosh Parashar from Mirabilis. Go ahead.
Hi, sir, for the opportunity. Just two questions. First is on if you could please provide the breakup of the revenue between faucets and appliances in that segment, and how much of this was from UAE. So largely the exports to UAE and the split between appliances and the faucets part. And second is, if you would please elaborate on the plans of the new Carysil brand that called out in your commentary. What are we trying to do here in that services business in India? Are we trying to tie up with real estate developers, or will we do it through our dealer distributor channel? Just plans on that front.
Okay. So coming to your first question, I'll ask our CFO to answer, but I'll answer your second, third, and fourth question. So starting with your last question, the Carysil is we have already in advanced talks with some of the major stone guys and the modular kitchen guys, which they have promised to give a certain amount of guaranteed quantity. So I think that's how we're going to start. Why we're doing Carysil is because if you want to have a seamless integration, you need to have the same colors of our sinks in the quartz surfaces. Hence, we are launching our new line of our own designed quartz, which will have a seamless integration to our sinks. As far as the UAE appliances, we don't export right now. The UAE is an independent subsidiary based in UAE, so they procure these appliances, they trade it to various parts of the world, and they sell it. The only thing what we export is the sinks to the UAE. I'll request my CFO to give you breakup of the faucets and appliances. Anand, if you can share that.
So the faucet, this year turnover for FY'24-25 is 15.22 crore against last year 11.27 crore. So there is a growth of 35% on faucet side. Coming to appliances turnover for this financial year 31.45 crore against last year 29.81 crore, growth of 6%. This is for our India business. UAE business are already spoken about. So total UAE business for this year is 14.41 crore, which mainly appliances, which is from their sourcing. It is not going from India.
Okay. And just one follow-up on this UAE business. We had plans of opening showrooms in a lot of places like Sharjah and Oman and also. What is the progress on that front?
So the plan, no, it is already the deal is done. So already the showroom is on the making. We expect opening in the first week of July or in the month of July.
Got it. So thanks for answering.
Thank you. The next question is from the line of Nikhil Gada from Abacus AMC. Please go ahead.
Yeah, hi sir. Thanks for the opportunity and congrats on a good set of numbers for the fourth quarter. So, firstly, sir, just regarding the IKEA business, can you call out what kind of a volume, incremental volume can we see with this deal signing that you have done?
So the potential, Zinbai, is going to be about 3x from our, current volume. We have significant revenue with IKEA. I would say in a digit about 10% of our total revenue. So that could, if in terms of numbers, it is huge. 3x of that would somewhere be in the range of about 180,000 to 200,000 units, what we're going to have. So I think there's going to be a significant rise, and this comes a complete non-US business. So I think, the potential to achieve this is quite high.
Got it, sir. And is the assumption right that this is also going to be a high value-added product as in terms of margins, or?
That's correct. That's correct.
Sir, then in that context, just looking at your standalone numbers, FY'24 we did margins somewhere around 21.7%. Do you think these margins, we can surpass these margins with these contracts and the overall capacity utilization in 26? Do we look at 20 to 23% EBITDA margins?
No, I would rather say that, by that our focus has always been on a margin improvement. Sometimes you can have a bad quarter here. But I think overall the company's endeavor is always to improve, to not to sacrifice the margin model, to constantly improve that. So I think, that is going to be our emphasis in the coming quarters, coming years.
Understood.
Thank you. Sir, we request you to rejoin the queue for follow-up questions.
Sure, no problem. Thank you.
Thank you. The next question is from the line of Sujal from ASP Finserv. Please go ahead. Sujal, sir,
Hello.
your voice is
Am I audible?
Yeah. Yes, sir.
Am I audible now? So first of all, congratulations, Chirag sir, for your good set of numbers. My first question is, I just want to know that can you please clarify your target market and audience, in which regions in India are you primarily focusing on, and is there a stronger emphasis on B2B sales and B2C for calls also and for the...
We lost you.
Am I audible now, sir?
Hello, we lost you. Yes, you're audible now.
Am I audible now, sir?
Yes, sir.
Hello.
Please repeat your question. Please repeat your question, sir.
Sorry for the interruption.
No,
I just want to ask you...
No, I understand. I understand we are focusing in India on the premium market segment, so mid to premium for the kitchen, the appliances.
Kitchen appliances and calls.
Correct.
For both.
Yes. Yeah. Overall, our category that we target the premium segment of the market.
Yes, I just want to know about primarily focusing on B2B or B2C, and which in segment like kitchen appliances you do the B2C more and smooth side and pots B2B. So overall, which part of your more in the domestic market?
Domestic market we're doing about 80% B2C, and we do 20% B2B, 20 to 25% B2B.
Thank you, sir. And another question, sir, from my side is, could you please provide the insight in the company distribution strategy for kitchen appliances? Are you leveraging existing distribution channels, or you are considering partnership with retail channels?
Correct. Good question. I think 70% we are leveraging our network in terms of appliances, but we are about 30% of that we are tying up with the electronic chain. Like we did two big tie-ups in Kerala. One is with G Mart, and second is with some other large retail, I forget the name. So we are now, I was very happy and pleased to see that our brand was, our brand was placed with Panasonic, Whirlpool, or the large appliance other companies. So I think we are emerging in, at least in parts of the whole of Kerala now is an electronic brand. So I think it takes time. It's not that something which you can achieve overnight, but I think our constant effort will result into that. So I think somewhere we need to leverage, but looking in the next 3 to 5 years down the line, I think we'll have a 50% of our channels completely new than our current set of dealers. So we have to get into inroads with large modern trade electronic stores to get to up our game in the appliances segment.
Thank you. So just follow-up question on the last one for last.
Sorry to interrupt you, but we request you to rejoin the queue for follow-up questions.
Okay.
Thank you. The next question is from the line of Vansh Solanki from RSPN Venture. Please go ahead.
Hello, Chirag. Am I audible?
Yes.
Yes, sir.
Yeah. I just want to ask on a Karen order regarding the US. So is it a one-time contract or a multi-year agreement? And is there a renewal terms or a minimum volume commitment, like something like that, if you can give details about?
No, these are all long-term contracts, which are at least for the last source they changed was after 15 years or something. These are very, very long-term contracts. We do not have any period of time mentioned.
Okay. And what is the guidance about average effective tax rate? Because in the last 2 years, we are getting about 27-28% because of the USA subsidy loss. So what would you think, whether it will go to 24-25% like before?
Sorry, Anand, can you answer? I'm not able to understand.
Sorry, you have to repeat your question.
Yeah.
So in last 2 years, our average effective tax rate was around 27-28%. But if we see back,
tax rate, okay.
Yeah, if we see before that, our tax rate will be around 24% in last 4 years. So what would you think for the next period it will be?
Okay. So tax rate has gone up because of the higher tax rate in UK. Earlier tax rate in UK was 19%, which from the last financial year raised to 25%. So because of that, our average tax rate has gone up. There is no change in tax rate in domestic business standalone.
Okay. And the last question is about working capital days. You mentioned it is 87 days as of now. So will there be a decrease in that?
Yes. So we are working because there are some one-time inventory stock we have built up for our future demand because of the BIS issues. But that will get consumed, and then overall normal operating cycle will come into play and will improve from this level. So they are definitely going to have a lower working capital going forward.
Okay. Thank you. That's for me. Thank you.
Thank you. The next question is from the line of Rupesh from Intelsense Capital. Please go ahead.
Hello, Chirag bhai. Am I audible?
Yes. Clear.
Yeah. So I have several questions. First, I think on subsidiaries. So first question, I think, is on United Granite. Maybe if you can give how was the profitability for Q4 and how do you see next year panning out? The second question on subsidiary is Carysil Products UK. The revenue moved from 9 million pounds to 12 million pounds. So if you can give some idea about what led to this growth. And can we expect, similar growth in FY'26? That is another question. And then in UK, I think you said you had some deal with some retailer. I didn't, if you can I didn't understand that part. So if you can give some details around that. So that is first question on subsidiaries.
Okay. So I think the subsidiary, there was a downturn adverse in the US, so the home improvement business of the high mortgage rates. Which is still there. But I think the improvement We have improved from our part. We have started targeting the upper high class of the U.S. market. So we have started cutting the marbles and quads of very high and a unique exotic marbles and quad, which has led into higher profit margins. So which we were about negative 8 to 10%. We have now crossed the break even. I think we are about at 2 or 3% profit now. Coming quarters, I think we see a significant improvement in the margins moving forward. That's for the U.S. subsidiary. As far as the U.K. is concerned, we are immensely focusing on new products. We have launched ceramic sinks. We have launched a new kind of faucets. We have introduced new kind of sinks. We have additional about 12 to 14 new customers on board. So I think that our team is very, very active because we have a massive cost leverage here to take on the competition. As I mentioned in my speech, we are emerging to be in the first three majors in the UK market. Howdens was the largest kitchen manufacturer in UK, which we had signed a deal last year. So we are exclusively to Howdens. It's a very, very strong business, about 80 to 100,000 sinks a year just for Howdens. And they are still going very strong. I am in UK while I'm speaking and I'm meeting them, and they are still few of the while the UK is not in the best of the economic situation, but surprisingly, the home improvement with some of the large retailers still have been very strong. So I think by expanding our product range and by adding new customers, we should be able to continue our momentum.
Thank you. Thank you for the answer. My second.
Thank you, sir. Ladies and gentlemen, in the interest of time, we'll take this as our last question. I now hand the conference over to the management for closing comments.
Sir?
Yeah. I'm just trying to open my. Thank you, everyone. I hope we've been able to answer all your questions satisfactorily. However, if you need any further clarification or want to know more about the company, please contact the SGA team, our investment relation advisor. Thank you and have a great evening.
Thank you. On behalf of Carysil Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.